Here's why 2025 is going to be a challenging year for property buyers. Let's talk about this today. Guys, many of you may have seen this article that says Q4 rebound underscores resilient housing demand, but market challenges remains from multiple analysts. And immediately you'll be thinking, yeah, I was exactly thinking about this. How can the markets be so resilient? How can Singaporeans be so rich? Oh, the 4-bedroom condos these days can trade 4,000 plus per square foot and still almost fully sold. Do this article for you today because there are multiple comments from different people, which is absolutely normal. Why? Because in Singapore, only 20% of Singaporeans actually own private properties. Just like myself, you'll be also very concerned today that, hey, with all the prices being so high, if today I go and buy ORI at $2.8 million for a 3-bedroom unit, am I really able to sell in future at $3.5 million? Because I calculated if the person is going to buy at $3.5 million, they have to be making at least 20 over 1,000 in order to be able to afford. Are there really so many people with the 20 over 1,000 income or 30,000 income that can buy from us? So today, if you are a serious buyer looking to buy into the property because you don't think real estate will be a bad investment after all, just like myself, it's really a matter of how much you can make. And personally, I feel that as long as you don't buy out of emotion, the chances of losing money is really little. But the biggest concern today is that will the musical chair stop this year after you buy property? Moreover, as a buyer, you are not guaranteed to get a unit even if you go down and have the money. You're still subject to ballot number. And when it comes to the post launches, you're not so interested. So sometimes it makes me wonder whether is it really a FOMO or value investing. So if you want my tips, right, make sure you stay until the end. In this article, there are a lot of different comments. We're going to deep dive into it. In this article, there are a lot of opinions over here. I'm going to deep dive into the ones that are important. And from there, we're able to decide whether should you buy or should you not buy a property in the year 2025. So if you're someone like me, when you are reading news, you want to read the main point, which is the quote-unquote 重点, right? Do me a favor by liking this video because it's going to help me a great deal. Thank you so much. So how this video is going to be done is, number one, I'm going to go through the TLDR version of this article. Next, historically, how did the market perform using facts and figures in similar scenarios? Last but not least, if you're a seller and buyer, what you should be doing in this season. Momentum from an unexpected rebound in private home prices and sales in the fourth quarter of 2024 could boost prices by 3 to 6% in the year 2025 after a 3.9% gain last year, analysts said. So despite a notable sales rebound and price uptick in the final quarter, full price growth for 2024 moderated to 3.9%, continuing a progressive deceleration from 10.6% in 2021, 8.6% in 2022, 6.8% in 2023. Meaning to say that each preceding year, you actually see the growth slowing down. This year-end market recovery partially mitigated earlier weakness, yet undiscerned broader complex market dynamics and challenges, she explained. Overall, buyers may turn more selective after private home sales jumped by 38% in quarter 4 to 7,433 units from 5,372 units in the third quarter based on URA figures released on Friday. So if you want my comments on the decelerating price growth, right, previously we have done this video that talks about the price performance in 2024 coming into 2025, which will actually shed the number of new launches in the year 2024 and how come there was a delay effect in terms of the pricing of the new launch market. So go check it out if you're free after watching this. So in 2024, non-lender homes in the RCR grew at the fastest pace at a cumulative 5.8%. So on an annual basis, most importantly is a lot of people say OCR can make the best money because you can buy bigger and bigger and bigger, which is not wrong to say that. And a lot of people say that CCR is not good. You may have watched a lot of YouTube videos, they say that nobody wants to stay in the CCR area, which is not wrong to say that because CCR really don't have a lot of good schools out there unless you're talking about the Bukit Timah. You can see that the CCR actually grew 4.5% as opposed to OCR growing at 3.7%, which is a little bit different from what we actually saw the previous year whereby OCR enjoyed a double-digit growth, which we will talk about this later on. So Wang Xiu Ying, PropNext Realty, Head of Research and Content, notably the price growth in OCR is substantially, which is positive for the mass market because it will not be sustainable for prices to keep rising at double-digit percentage pace. So rest of the article is about the rental and for the comparison of different regions, quarter over quarter, year over year. This is chart. Go check it out yourself. So some 8,460 private homes, excluding condominiums, were completed in 2024. Is it the editor mean excluding executive condominium? Well, not bad. That news article also can have typo. No. Or is it I read wrongly? But the real answer is 8,460 private residential excluding executive condominiums were completed in 2024, down from more than 19,000 units in year 2023. Projected completions are set to decline to 5,846 units in 2025. We all know that when you're buying a property, many will consider both resale and new launch as well. When there are lesser completed homes, quote-unquote TOP properties, means to say that there will be lesser options for people who are looking to buy a new property. If you are looking to buy a new property, you can choose to buy direct from developer, or if you have no patience to wait for 3 years later to get your keys, you can also go to the TOP market to buy. So having more completed homes in that particular year will also take away some demand from the resale market as well as the new launch market. So in 2024, the median transacted non-landed new home excluding EC was $2.1 million compared to $1.6 million for resale non-landed private home. That means the new launch versus resale, the gap is about 31%. The rest of the data, just some ding-dong up, down, here, there. Basically, we know the transactions sometimes go up, sometimes go down. End of the day, if you use a longer time frame, right, actually it's pretty similar. New launch last year was 6,000 over transaction, resale about slightly above 20,000. So each new launch you see that's being sold, like there will usually be 3 to 3.5 resale condominiums sold. So that's why a lot of people say that, oh, new launch market super hot. A lot of people buy. For every one new launch sold, there are 3.5 units of the resale properties transacted. So clearly, resale is more popular for a very simple reason, because most people prefer to go for immediate gratification and a lower monthly commitment. On top of that, they may not have the luxury of renting or staying with their parents while waiting for the new launch property to be completed. Now that's all for the TLDR version of this article. Next, we want to talk about historically what happens when similar situations occur using facts and figure. I went to pull this chart together for the OCR, CCR and RCR region, because obviously today when you're buying into a property, we'll compare all three regions, and some of you may be buying for own stay. Yes, maybe you want to stay in the OCR only. However, you can also consider moving to the RCR if your budget allows. But there's one district where a lot of people may not really want to move into, which is none other than the CCR area, and the much debated over the last few years, because especially after the 60% ABS lease slapped on foreigners, you start to see that the prices begin to dwindle. Right now, we are facing very unique situation whereby the CCR properties right now is trading at $2,320 per square foot. RCR is 2,163 PSF, and the OCR is 1,741 PSF in the year 2024. But I can see one thing, if I give you a live data, right, the average PSF of the RCR properties has already exceeded the CCR. So I tried to go and check when was the previous history whereby the gap was so close if you're just comparing 2024, and I literally gave up, because if I look at this table, right, you only before year 2008, when Singapore properties were still like few hundred to $300 per square foot, the sale at Marina Bay at $1 million that time, you really cannot find anything like basically. So close in terms of the absolute percentages. Of course, in terms of PSF, when RCR was $500 per square foot, CCR was $700 per square foot. In terms of per square foot price, it's about the same, only $200 gap. However, it's a whopping 40% if you're using percentage difference. It's really a phenomenon. Basically, it overshot. Pardon me for my lack of vocab, but I think my value in data over is what you are here for. So if you have not subscribed to this channel already, do so right now by subscribing to the channel so that you won't miss out on my future videos as well. Make sure you stay until the end of this video, because I'll be sharing some information about why 2025 CCR could be an exciting region for investors and people who are looking for an investment / own stay perspective. As for the RCR region, most of the land has already been locked in, and the price has been pretty proven that buyers are able to accept the quantum at today's market, even for the Ori, Emerald of Katong and whatnot, plus the Parktown Residences and the Alta that is launching on 7th of February. By the way, that's my birthday, did you know, 7th of February? So if you grant me my birthday wish, if you want to go and see the Alta or Parktown Residences, can give me a call. Can avoid 7th of February because also very busy that day. But the next few days I'm free, I can go there together with you. But jokes aside, if you need any information about upcoming launches, I'm just a message away. Happy to share with you my advice when it comes to investing. Many people will always tell me that buy the bigger the better, the bigger the better. But is it true? Sometimes the bigger you buy doesn't mean that you need the market to outperform the current market in order to be able to exit at the future price. Because when you're buying a bigger unit, always means to say one thing: you are buying at the most expensive. And the most expensive means to say the economy has to do even better in the next few years. So next we want to discuss this. Ample fresh supply in new projects could lead to more discerning buying. Actually, what is discerning buying? So it's the practice of making careful, thoughtful decisions when purchasing products and services. Discerning buyers are selective, value quality over quantity, and prefer experience over impulse. They may also consider the company's social responsibility. Sorry, I don't know which analyst said this, but in my view, all Singaporeans, when we're buying property, we are all discerning buying. There's never been impulse buying before, because these days buying property is not cheap. But right now, this article, it says that ample supply. We checked into the latest report by URA. You look at the total number of unsold private residential in the pipeline, right? You will see that Q4 2024 is actually pretty decent. You see a slight jump in terms of the number of ECs. But if you compare it back with the year 2020, where we still have a lot of balance stock spill over from the en bloc cycle in year 2017 to 2018. If you wish to know a bit about the en bloc, my previous video about Parktown, I actually mentioned about the en bloc cycle back then. Coming back to the chart, it's pretty obvious that we are not really in an oversupply situation. And if you go to the exact data over here from URA, the uncompleted unit in year Q4 2024 with prerequisite to sell but not sold yet is 3,565, which unsold. It says 3,565, but as a realtor now, I cannot really remember anything that's launched but unsold got 3,500 over units. Maybe the ones I can think of will be the ones that have launched and then they decided not to launch again. But not launched yet, 6,600. So without prerequisite for sales, total 9,834 number of units. So total amount of supply for the year 2025 will be at about 20,000. So some people will say that, wow, Marcus, 20,000 a lot leh. Actually, it's not wrong to say that lah. But if you use math, right, 1 year on average, in the last 2 years, the new launch market actually consumed a total of 6,000 plus new launches per annum. So if you use 20,000 divided by 6,500 units that are transacted on average per year for the last 2 years average, right? We are talking about 3 years to complete selling everything. So will there be stress for developer to sell when developers actually have a 5 years window to sell in order to avoid the ABSD? If you use a longer term perspective, right, the average number of transacted units in the new launch market are ranging between 8 to 10,000 units. Means to say that today, for this amount of supply, developers will only need a 2 years time frame for them to finish selling everything. And not to forget the lower interest rate, higher GDP and whatnot. This will be additional factor that may boost the new launch market at the same time. And coming to this part where it says that there are less number of new private homes excluding EC. Excluding EC were completed in 2024, down from more than 19,000 in year 2023 and set to further decline to 5,846. So what does it actually signal to us? Earlier on, we mentioned whenever there's lesser new homes completed, means to say that there will be less competition in the resale and also the new launch market. So we should be expecting a stronger demand, and this in a very simple term is called undersupply. And we went back to check when was the last time you actually have similar scenario, and you will see that of course none other than year 2021 when new home completions were being delayed and the bulk of the en bloc cycle properties were actually completed in year 2022-2023. So when the supply of the new homes were at its lowest from year 2021 onwards, you saw a major jump in terms of the pricing, with OCR jumping up 32% over 3 years, the RCR increased by 20% over 3 years, and of course the underperforming CCR at about 10%. But all in all, just goes to show us that when the supply of new completed homes goes down, right, there will be acceptance of the new pricing of the new launches and even in the resale market as well. So that's all for the historical numbers. So coming to what you should be doing as a buyer and seller. Thanks for staying to the end, because honestly, I also a bit lost on what you should be doing as a buyer and seller today. However, I will fall back to my 3 golden principles. Number 1 is to start saving and start investing as early as possible. Next, constantly upsize your asset net worth by upgrading to the next asset class as soon as you can. Last but not least, always try to have 18 months reserve funds, if not a 20% buffer of your available capital. So if today I'm a buyer looking to buy my second property, it's actually not really that easy. Why? Because when you go into the new launch, you need to ballot, you need to get a queue number, you need to go there smell each other's armpit during the preview. You still may not be able to get a unit. So even some of my clients, they don't even bother to go down to the show flat. They just say give you a check, if you can get, then we talk about it. That's from an investment perspective. But jokes aside, most of the developments that's available right now, Bagner House already launched for first half. Already at Tampines, not all of you are able to qualify qualify. And Lentor residences, some will complain that there was too many supply. Then the Alta, people will say that not near MRT station. Plantation close EC, again people cannot buy. Park Down, Tampines, I don't like. Marina Garden, I don't want CCR. So there's still so many other launches. Bloomsbury, non-MRT. If you look at the next few months, right, actually you don't have much to buy. Most of them are actually in the CCR. And RCR no more already, only left the Arena East, which some don't like small project. And then the OCR, just a couple of them only. And the rest will all be the CCR area. So long story short, if you're a buyer and you don't have deep pockets and you miss out the upcoming OCR launches, right, you most likely will be priced out for the next 6 months again until those in the third quarter will be launching. And actually I went to see that next half of the year, right, actually there's also not a lot of developments for you to buy. Here is the list. You can go check it out. I'm still don't give up. I went to check the next few launches. I went to see the previous land sales, and we all know that for a developer to launch a land, right, usually you need between 12 to 18 months for you to launch. More often than not, it's about 18 months. So I tried back at the new GLS that was done in early 2024. You will see Marina Garden Crest, which is not awarded. Orchard Boulevard, $2,652 per square foot break even. Media Circle, which is the upcoming Bloomsbury. And you can see, actually, you check back, there's really nothing much to buy. Delta will be launching already. Pine Grove Parcel B, which is Nava Grove launch already. So you see, you go up, actually nothing much to buy on there. Nothing much to buy. Only left, Zion Road Parcel A, $2,091 per square foot. This is not that simple. This is the one with the long stay service apartment. This will surely be not cheap. Should be about $3,000 PSF and up. Upper Thompson Road Parcel B, a lot of nature. Right beside the MRT station, trading 1,006. So if you're not a fan of Lentor, surely this one is out for you. Holland should be about $3,000 per square foot, given the price of the current one Holland Village residences. River Valley Green, interesting plot right on top of Great World MRT station, connected to Great World City Shopping Mall in future. So all these, right, just point you to one thing. Actually, the upcoming launches, if you don't want to buy, and the post-launch you don't want to buy, and you're not interested in the above, right, basically you are stuck once again. So for buyers, right, I would think that if you're really not interested in the current launches and you have fairly reasonable amount of budget, I would think that the CCR could be something that you can discuss with your spouse and your agents, or you can discuss with me. I would think that there are certainly certain pockets of value. And for the post-launch currently, I will have already identified a few good post-launches. I have the data to back to show you why I think it's worth buying. Just do give me a call to discuss further. As for sellers, right, if you're upgrading, sell and upgrade. Why? Because sell high, buy high. I get a lot of sellers asking me, will my property appreciate in price? I say surely will, because Singapore prices will sure go up. However, if you're upgrading, right, you sell high, you buy high. And when I'm saying upgrading, example, if you own a $2 million property and you're buying two properties at a total value of $3 million, the more your $2 million property appreciate, most likely you are paying more for the next purchase. So don't be penny wise pound foolish. If you're upgrading, sell as fast as you can to move on to the next one so that you avoid sell high buy high. If you're selling to downgrade as usual, cash is trash, no rush to sell, don't really need to worry about fire sale and cooling measure. Just wait for as long as you can. Why? Because holding on to a property is still better than holding cash, because with more cash, you tend to make more mistakes. So for retirees, no need to rush. So with that, thanks for watching to the end. Like, comment, subscribe, turn on notification bell, because we post weekly real estate videos like this. Thanks for watching to the end. See you at the next one. Bye.